Are you tired of guessing gains when trading financial markets? Are you ready to trade with confidence and consistency? Welcome to the ultimate guide for disciplined day trading. I'm Stephen Cox, CEO of Share Navigator, and today we're unlocking the comprehensive day trading strategy, your roadmap to success in trading FX, gold, and indices. First, let's lay the foundation. Our strategy focuses only on highly liquid markets. Think of major FX pairs, the ever popular gold, and robust indices. We strictly avoid individual stocks due to their unpredictable liquidity and unique risks. Stick to where the volume is. Next up is pre market homework. Always check the economic calendar before you trade, because high impact news can cause wild swings, especially in FX. So be aware of the release times and consider sitting out during those volatile periods. Maybe consider stepping out an hour either side of that announcement. Next up is our technical analysis, and always start with the daily chart and establish what the primary trend is. Is it a bullish trend, a bearish trend, or a sideways trend? This is critical because on a short term trade, you never ever want to fight the main trend. If the daily trend is up, you're only going to look for buy setups on your execution chart. Now it's time to get precise with our entries using a 15-minute chart. So we've switched from daily to the 15-minute chart. We're going to insert our 14-period relative strength index, and we're going to set alerts when the overbought conditions are met, which is RSI over 70, or when RSI is below 30, which is considered an oversold condition. Now, please note, this is your initial alert. It's not your entry point. So the alert just piques your interest. The actual entry comes with confirmation. So if we're in a series of lower highs and lower lows, like we are in the previous example here, the confirmation comes when we've broken above those series of lower highs and lower lows. So if you look at the example here with the euro dollar recently, you can see that there was no trend line break, even though our RSI went below 30. So therefore, no trade was placed. But just about an hour or two later on, we did get a confirmation break, and that's when we would place our trade. So please wait for the trend to be broken before you place the trade, even when RSI gets into overbought or oversold conditions. And this is the most important piece of advice. Always try and protect your capital as much as you can. Our golden rule is never to risk more than 2% on your total account value on any single trade. So if you've got a 10,000 euro or dollar account, only risk 200 euro per trade. And this is where setting your stop losses comes into play. Setting your stop loss should be considered from both a technical and a financial perspective. So looking at it from a pure technical perspective, again using our euro dollar example here. So we've got our long entry point, you can see marked by the green box on the right hand side of the chart. Then on the left hand side, you can see the previous 15-minute low. You want to set your stop just below the previous 15-minute low, because if that low gets taken out, it's likely that we're going to continue to create lower lows, and this will allow you to limit your losses early. So the second part of looking at setting a stop loss is the financial aspect. So we've already established that we're only prepared to risk 2% per trade. So that on a 10K account is 200 euro, just as an example. From our previous slide, we've said that our minimum stop distance has to be 24 points, which is just below the previous 15-minute low. And if we divide 200, our maximum risk, by our stop distance, that gives us a bet size of €8 per point. Now, what we could also do is increase our stop distance, but that would mean we'd have to reduce our position size. So if we increased our stop distance to 48, for example, well, then we would reduce our bet size to 4. And that would allow us to stay in the trade longer. And everybody's perspective on this will be different. Some people will want to stay in trades longer, so therefore they will have a smaller bet sizes. And other people are looking to maximize their profit from having tighter stops, and when the trade does go for them. But the one thing with your stops that are non-negotiable is, at a minimum, it has to be but just below the previous 15-minute low. So if for some reason you don't follow the rules of breaking the downtrend and you enter the trade aggressively, you must set your stop exceptionally tight. So in our example here, the euro dollar, where we didn't get a downtrend break, even though there was a big bullish candle, maybe you entered there. If you decide to place that trade, you want to set your stop just below the previous candle's low. That will help you avoid some potential further losses. As you can see, that downtrend just resumed in this example here, and you would have lost in that trade. So if you do decide to go into something like that, you need to set your stops even tighter. We would recommend, however, sticking with the overriding principle of don't engaging in a trade like this until that downtrend is actually broken. So now that we've considered all of our risk management end of things, we look at our upside. And our upside in our day trading scenario here is when RSI returns to 50. And that's when we take that profit off the table. Now, sometimes you're not going to be able to watch a screen until RSI returns to 50, and that's fine. So you would set your limit then at 10 points. So if you're going long in the trade, it's 10 points above where you entered. If you're going short in the trade, it's 10 points below. But that would be our general rules of thumb. Whichever comes first, when RSI hit 50 or when you generate 10 points on per trade. So trading isn't just about charts, folks. It's about discipline. You got to stick to your plan rigidly. Do not chase losses, and absolutely no revenge trading after a bad day. Every professional keeps a trading journal. Record every trade, your rationale for the trade, and importantly, your mental state at the time of placing the trade. This is how you will learn which type of trades win for you and which 10 type of trades lose for you. You'll start to see a trend. And review those results weekly and establish which trades are winners, which trades are losers. And again, you will identify the instruments and the type of trades that work for you. And again, never over leverage. Your 2% rule is your lifeline. Don't gamble your capital away. This complete Share Navigator day trading strategy provides you with a robust framework for consistency and capital preservation. But remember, continuous learning is key. If you ever find yourself in doubt, hitting a rough patch, or simply want an expert review of your trading strategy, we have one final rule, and that is to request a free strategy call with Share Navigator. Our team is here to help you optimize your approach. Visit our website sharenavigator.ie and book a free strategy call.